Hello, everybody. It is the 6th of May, 2011. Welcome to the Silver Log. Hope everyone is doing magnificent. I know with this big fall, some people love it, some people hate it. It all depends on what side of the fence you've been looking on. If you've been waiting for your pullback, congratulations. You have gotten your pullback. Whether you want more, or whatever you want to do, then congratulations and good luck to you. This trend line has not only not been broken yet, but it is still a little bit away from it. We're seeing the market move from 33 to 36. That's approximately a 10% move. It used to be 10% meant a lot. Nowadays, it's just a small intraday movement. Volatility, of course, being very massive. If this trend line cannot be violated by the end of the year, meaning we stay below it, silver will be 1 cent on January 1st, 2012. This is a current trend line it's got to get above. It's just a matter of time before it does it. We are in crash market territory. Whenever you see crashes of any sort, the volatility gets wild. At some point, it's going to have to settle out and calm down again. No need to think that the settling out is going to happen anytime soon. The pattern of lower highs, I don't even know if I guess you can count this. I said in the blog that we have to get above here to make a higher high, but really we have to break that trend line that I show more than anything for me to have anything to state that this crash mode is over. Because we're now at the point where we've had a little bit of correction within the counter trend rally, and it could go lower. This selling is paper related. This isn't the real physical metal. And who controls the paper market? If they have the availability and the wanting to do so, then they will take it down even lower. But we are in crash mode. Things are really picking up and getting extremely wild, moving from 48 down to, or 49 really, down to 33. That's a 16% move. Therefore, well over 33%, around 1/3 of its value, it's lost this week. Not normal market conditions. And we'll just have to wait and see. But what seems pretty obvious is that they're just pulling out all their tricks. They want to get people shaken out. That's paper related. I don't believe this sell-off, and until they can give me good reason to on a fundamental level, I will keep on stacking. I've been talking about volatility now. It seems for the last couple of months, I've been expecting and waiting for this to come. To me, I expect even greater than this, but maybe not for another month or two. Probably the breakout rally will contain the higher volatility, and it's completely massive to see where we have came from and where we have gotten to today. This is an average of about 3% moves per hour. A lot of stocks, like the Dow Jones, doesn't even average 3% per day. Yet silver is doing 3% on average per hour within the volatility from top to bottom, which means on $30, it's between like 30 and 31 type deal. That's about 3%, or 33 to 34. A dollar move or more per hour. All right, now let's move on to this weekly chart, which we see this big red candle, and this will be the biggest, largest down day in percentage move this millennium. Maybe ever, I'm not too sure. We're looking at like 25% depending on where we close. But that's pretty massive, and at the same point, we still are in a major bullish trend when you lose 25%. Why? Because of the pattern of higher highs and higher lows. We got these lows, and well, whatever this low happens to be, looks like there's now a decent chance it will be a higher low. Now, when you were coming up here, the chances of making a higher low was about 98%. Now it's about 80 something percent or 90%, which is still extremely high, but it shows the bullishness that this market has had. Now, it might be a little hard to make a higher high, but the way things are going, it really wouldn't be that big of a surprise. Now, as far as the trend line's concerned, a perfect hit within this trend here, connecting the breakout lows and the January lows, and thus we are basically trading within this range. Next one, the quarterly chart. This is not a bubble. People talk about a bubble in here. For that, we need to see the market stay below 50 for about 3 or 4 years and pretty much at least take out 846. Bubble means long term to me, rather intermediate term top. And as far as a cup and handle is considered, a lot of people have been asking me about this. No, possible, yes, but we've got our cup. Now we got to make the handle. This would be about as low as I want to go and about as high as maybe here. So we need to go down to at least 20 and then move higher. And it has to take at least a year and a half to do. So going to say no to that, but it's more bullish to not make the handle. Let's just put it that way. The trend line, I did this little while ago. Curve trend line, a decent mathematical formulation to make the rate of descent go lower and then rate of ascent go higher. Resistance here. This is the big support.